So if I know the reality of the market is there's not a buyer, then what do? You stay there as long as you possibly can. You squat if you need to, right? You don't pay the property taxes on the house. You don't pay the mortgage. How many stories have you heard about someone who had sat in a house for 7 years and haven't made a payment on it? Well, guess what? That's a strategy.
What's up, guys? Welcome back to another episode of The Dime. I'm Brian Fields. With me, as always, is Kellen Finney. And this week, we got a very special guest. Returning again, Seth Yakatan. Seth, thanks for taking time. How are you doing today?
I'm awesome, guys. Thank you so much for having me. Greatly appreciate being on the show.
Excited to have you back. Kellen, how are you doing?
Doing really well. Really excited to talk to Seth. Really excited to get another West Coast opinion back on here. How you doing, Brian?
Yeah, we're going to skip all that. Seth, for sure, on the West Coast. He's not going anywhere. And I'm going to try to pretend he's on the East Coast. He's out there. I got nothing on him. But we got some hot topics today, Seth. And the first one that I wanted to get your opinion on is this one. The cannabis industry is hard, but it's not going anywhere. What's the first thing that comes to your mind when you hear that?
Batten down the hatches and let's just go. I've talked a lot about the corollaries between biotechnology and cannabis. Biotechnology is harder than cannabis. There's maybe more money available to it, but if you're in a $15 million revenue profitable cannabis or operating cannabis company and you're in a phase 2 clinical trial for a drug development company, you're fighting the same battle. It's just different constraints. So I think it's battened down the hatches. It's not going anywhere. So if we're going to continue to talk about how difficult it is, it's still a $30 billion industry. If we want to talk about the black market effect and the delta effect, it could be a 50 or a 60 or an $80 billion industry. And it's just a matter of time. So keep complaining and I'll keep pounding.
When I hear that, right, hard is relative. And I think everything that goes on in this industry and outside industries, there's different challenges to leveling degrees. But I wonder if the reason people find it extremely difficult is, yes, there are those challenges, but maybe early on, everyone thought it's growth at all costs. And now they're kind of homing in and saying, we need to get a better understanding of where our cash flow situation is. We need to get a better understanding of what our COGS are. And when you start figuring out what we do well, because specialization is coming and we need to figure out where our success is for long term. Is that the way you think about it, or do you think about it a little differently?
Think about it a little differently. It's hard probably for 3 reasons. There's not a lot of capital available. Stop there. You had a bolus of public equity money. You had a bolus of private equity money. That's all flamed out. So what you kind of have is maybe some high net worths and some debt that's available. So the feasible region of capital that's available for people is pretty small at this point. The second thing is you don't have a playbook. So the playbook that we had for the first decade is I'm going to build this giant thing and sell it. Well, outside of like maybe Lord Jones and Select, nothing sold. So if you started a cohort of 800 companies and 2 sold, that's why you don't have any money. So the second reason it's hard is that there's no playbook. There's not a playbook for here's the Henry Ford way to grow a business. And the third reason it's hard is that you have a ever-changing and very complex regulatory environment and a taxation regime, which, aside from tariffs now, is more onerous than any other industry. So when you put those 3 things together, it makes it really, really, really hard. So a lot of other industries that we could talk about, AI or software or manufacturing or biotech or consumer products or beverage, they're hard for the first 2 reasons. But because there's not a lot of money and you probably have to build an exit, they don't have the taxation and regulatory issue that we have. So it's definitely hard.
So what are companies doing then to batten down the hatches in order to address all 3 of these? Or what should they be doing?
Well, I think the good ones are kind of saying, I don't need to grow at all costs. So if I'm in 7 or 9 states, me getting into the 10th, 11th, and 12th state this year might not be the best thing to do. Me staying in state 7, 8, and 9 and figuring out how to own and win and make those investments profitable and make those states profitable might be it. If you look at a company like Wild, who's extremely penetrated and extremely large, they're trying to make some moves. They announced a D9 beverage. Why? They own the rails, right? So if you're in states with Wild and they have their own effectively, trucks, that's a great move. So I think people are looking at ways to alternatively maintain hegemony, which is what they should be doing, as opposed to the growth at all costs, which has been kind of the historical model which we've underwritten.
What I love about that Wild move, though, is that they have a brand that everyone knows. So when you go into a dispensary, you can lean on and trust on it. Consumers can believe in that brand. And then they expand to another category where if you're interested in trying a beverage and you're not sure which brand to try, a brand power like Wild is really powerful and influential because you go, I know this brand. Let me try this product. Do you think that's part of the decision making of leveraging that brand authority in order to expand the categories?
I think so. I definitely think so. Wild is one of the 10 maybe must brands in the industry. And I also think, Secret, great leadership. You have a guy in Aaron Morris who talks to me often for some reason, thank God, who's obsessive about what that company does and how that company runs and how it's modeled. He's taken capital from outside investors, not too much, maintains control, and it's the same model. If you look at another brand who's kind of underwritten in a different product set, kind of the same, I'm going to be early and I'm going to own it model in Rove, right? You have two of the same types of models that others like, Groon and Arrow and Timeless have kind of piggybacked off of to win. But you have two definite clear models there that tend to work. But I think Wild is a factor overweight in the leadership of Aaron Morris and his vision and his capability to do things that other people maybe aren't willing to do on his own terms. And that's really interesting to me. And I think Aaron's probably one of the brightest minds in the industry that nobody really probably talks that much about. So
are there techniques that, let's say, smaller companies and smaller brands that don't have as much brand staying power as Wild has can leverage to try to achieve that brand status, that brand staying power, but also recognize that they have to spend on marketing, they have to spend on kind of consumer acquisition costs? And is there any techniques that you can provide for these smaller brands that are looking to get to that Wild level?
I talk about it a lot. I think it's quality and consistency in product. So whether you consume Wild or whether you don't consume Wild is in the context of every single gummy conversation that the three of us are ever going to have, right? Whether it's your mom or your girlfriend or your sister or your uncle or your cousin or somebody who's just tried gummies for the first time, that the quality and consistency of that product is kind of par excellence or bar none. And I think the reason that has done well isn't just because of Aaron and what he does. I think it's also because the QA QC around the flavor profile and the taste profile and the effect profile of that product is 100% consistent. And I think if you can do that with product and with a product that you're going to try and scale multi-state, that's probably the number one thing to do.
Do you think there's an easier product SKU to kind of manage all those aspects with? I know Wild is a gummy, right? And so with that kind of leads to like you have more control over the consumer experience, right? Because you're dictating almost the entire ingredient portfolio that can go into it. Yeah, there's an art to that, of course, right? But with flower, sometimes you're kind of at the mercy of the genetics that you have and other influential factors like that. So do you think that maybe product SKU has a lot to do with that?
I think it does, and I think you're seeing it with pre-roll. So I think you saw Jeter underwrite that strategy in, 12, 15 states. I've seen Massachusetts data on pre-roll that on Jeter that they moved the entire market with the introduction of their pre-roll when they came. And now you have Natura coming and nipping at their heels, right, with the Sluggers product, and more power to that team because those guys are killers. Not a coincidence that most people are former Israeli special forces in the company. I'm kidding, but they're coming, right? And I do think that infused 1 gram flavored pre-roll is another one where you probably have a lot of it. You have some excess biomass. It's not a hard SKU to make. Timeless has really done a great job with their Tumble product in California. It's really taken up. There's another company that's really doing great in terms of penetration in California with a similar SKU called Lime, and Giovanni and his crew. So I think that's another SKU set where you see it. I think gummy's the easiest because once you have the kitchen, it's pretty much, I don't want to say it's rinse and repeat, but it's easier. Your factor inputs are more limited or less limited. But I think I'm seeing the same capability to transform product across many state in pre-roll. And that also seems to be a form factor that people are gravitating to in terms of taste, flavor, bang for your buck, consistency, etc.
One of the elements I wanted to highlight, though, is you talked about the quality control and the consistency standpoint, because I think that approach is so underrated and so underappreciated. And that, when we've had conversations with operators, they talk about investing in technology and tools in order to help make that happen. But what they say is, hey, Brian, is like, we can't afford this right now. We're doing all right. Maybe we'll look to do this in the future. Do you think them skipping that step is in the wrong order and saying, let's build a quality, consistent brand first, product first, and then look to leverage that on the outside and kind of prioritizing the investment in technology first?
I don't know. I don't know that I have an answer to that. One of the people who was extremely gracious and is still extremely gracious to me with their time in their industry is Rusty from Old Pal. And it's pretty well known that they basically have a licensing model, right? So there's a company who's gone out and, sourced flower and showed up with, their brand ethos and their brand SOP and their packaging basically and sales support in a bunch of states. And I don't want to say that Old Pal isn't high quality, but I don't know that leading with, a live rosin, super ultra premium SOP is where they came in, and they've penetrated in a lot of places. So I don't know. I don't know that there's a correct order of operations. I think it depends largely on the SKU that you're running with. And I think certain SKUs specifically, and let's call it pre-roll and edibles largely, are probably easier. If you look at the mint category where you have, Botanica, which is a company that I like a lot, and Levels Pro Tabs that I talk about incessantly. You have two companies there where I do think there's a high level of technology, SOP, manufacturing understanding required. But I mean, you're just taking liters and converting it into your product anyway. So I don't know that there's a right footprint there.
Do you think that comes with like product maturity, right? Like as right now, I think it's probably challenging, say for like pre-roll, they're still going through changes, right? So like 2 years ago, the pre-roll that was constantly on the market is slightly different now because they're learning, they're perfecting it, infusion's becoming a thing. So once that kind of like becomes a timeless product, right, then there's going to be margin compression and they're going to look to optimize that product. Do you think that like the industry just maybe hasn't approached the point where a lot of these products have reached the maturity standpoint from a product SKU where they are looking to like optimize every last input, if you will, from like an increasing revenue perspective, or right? Or do you think they're just kind of playing the like what's hot now, keep the lights on and follow the trends game?
I think it's the latter. And I also think that you're maybe in the beginning of the second inning or the bottom of the second inning in terms of understanding, lean Six Sigma manufacturing in cannabis. Because if I listen to what you say about, okay, well, am I trying to maximize the value of every factor input and, use an SOP to do that to roll across 4 states? Well, like in Illinois and Jersey, it's really hard to get biomass. So it doesn't matter what your SOP might be. It's like, can you get enough product to put in your stuff, right? I also think that when I look at what has gone on, I think part of the what's hot, has to do with a lot of what the MSOs have done in the last 6 to 9 months in terms of right-sizing their organizations and down-regulating the amount of inventory that they're buying and looking at what the replenishment rates are and seeing how those products sell through. So I think some of it has to do with what is my end user. If I'm a brand, my end user is really the retailer. You can say it's the customer, but it's really the retailer because I'm not getting paid by the customer. I'm getting paid by the retailer. So a lot of it, I think, tends to be like, what's that retailer need? And I think that's, I don't want to say it's some level of inefficiency in our industry, but, ultimately, I think it's the truth. So I think it just depends,
I think there's inefficiencies everywhere that can be kind of streamlined. And I think when you have an industry as early as you said, like early in the second inning, there's opportunities. And these opportunities is where businesses can really make money on the margins, because maybe that means having visibility into your cultivation to get better concepts of your tracking and your yield. And maybe that means an additional steps through extraction and understanding how this plant then is going to wash and how your extract is going to be, all the way through inventory. And I think companies now are recognizing that they have cash, that's survival mode. Is it deploy for growth or profitability? And when we're doing for profitability, do we invest in technology and automation, or do we just hold it and try to keep the lights on? I think that's the biggest challenges we're seeing from companies, that they see there's opportunities and inefficiencies, but they're not sure if it's worth investing their cash to fix the leak or just continue on the process.
I think some of it has to do with the fact that the front end trade payable, trade credit side is so inefficient that depending upon where you're at in the supply chain, if you're a cultivator or if you're in manufacturing, or if you're a brand, or if you're an asset light brand, or you're at retail, each of those kind of factor inputs is different. Like one of the things I see I see more technology solutions for cannabis than I could shake a stick at. Like SaaS platforms and discounting platforms and advertising platforms. I'm like, a lot of times for me, it's hard to differentiate the noise from the signal. So I think each of the considerations around, do you spend more money in technology to optimize or you just operate, is conditional upon which of those 5 or 6 boxes you fit in. And the conversation's different, right? Because even in the same company, like a Wild or a Groon, if you're in many states, the questions that you're going to ask in Missouri or in New Jersey are probably going to be different than the questions that you're going to ask in New York or Florida or New Mexico, right? So I think it's also, going back to one of your earlier questions, the complexity in cannabis is logarithmically greater because the decision that you're going to make for the holdco organization, we're going to do this. We're only going to buy red toothpicks because red toothpicks are 5 cents at Costco. Well, you can't sell red toothpicks in New Mexico. So like the things that you would normally do in a company to optimize a technology investment or a rationalization investment across your platform is very hard to do in cannabis because of the multivariant legal system that exists in every different state.
Yeah, it's like almost, how do you balance like long-term goals and like a big North Star in terms of like justifying these investments with like maintaining next year's profitability and cash flow, right? And I think like Wild is a great example of that, right? Like they looked at their gummy line, and I think it's really curious that they went into beverages, right? Which, if we just kind of highlighted one thing you just mentioned, is there might be a bottleneck in the payables from the retailers. Beverages has seemed to kind of potentially open up this whole other existing retail market, right? With the hemp beverages, very similar chemical compositions, getting sold in standard retail locations. So like that investment essentially is put, or hopefully in their minds, is like opening up a larger market base for them from a consumer perspective, correct?
Yeah, I think so. I mean, look, I think it's less about, what I'm telling people in 2025 is survival is a win, right? I love sports. There's a tennis analogy called hold serve. Okay. What does it mean? It means if we're playing a game and I'm serving, I need to remain neutral because the advantage goes to the server, right? So the people that I talk to, you know what I'm telling them? Hold serve. You're in 7 states, own those states. You're in 7 states, maximize the value of those states. You're in 7 states, figure out where you can get operational efficiency in those. Don't go chase Virginia. Don't tell me you're figuring out how to get in Kentucky. Go fucking own Jersey. You're the 3rd largest selling edible in Jersey. Be the largest selling edible in Jersey. You're the largest selling edible in Jersey. Make sure that the second guy doesn't become the first guy. Hold serve. And I think what I'm telling people, the way that outside of the MSO view, if we're talking about the brands that we always talk about, I'm telling people hold serve, because if you can hold serve, that's going to be a win. It's going to be a tough year. Hold serve.
Is it hold serve through the end of the year? Is it hold serve with the target being end of 26? I know there's no perfect way, and I don't want you on the record trying to give me a date, but like when you're saying hold serve, is it a shortened time frame you're thinking?
My powers of prognostication relative to penetrating the orange office are quite low these days. So I don't know. I think it's hold serve through 25 and expect, unless there's some level of change in 26, it's going to be fair to Midland or fair to neutral or maybe worse. I don't know. Our new DEA commissioner doesn't sound to me like he's real friendly. Also, there was something that was brought up a couple weeks ago in Congress in the States Act that looks like it would be a home run. So I don't know. We've all been in this for 10, 11, 12 years now, waiting for that moment. For me, and you're not going to want to hear this, for me, that moment is between now and 2032. And if that moment comes between now and 2030, I've augmented my view. If it's not between now and 2032, I'm gone. I'm a ghost. I'm in Laguna making beads. Adios. Peace out. My phone is done. I'm off LinkedIn. Goodbye. Come to my hut and visit me. But if it happens, all the things that we've been talking about break open and become crazy.
I think that's the exciting, challenging dilemma, right? Is that we all know that we're at the cusp of what could be just an insane rip up from a graph standpoint, but also know that for the next 6 months could be insanely difficult. And they're likely be more chaotic, more companies maybe not surviving, which is leveraging for growth, right? Because if a company goes down, now there's opportunities to pick up those market shares. So are you seeing any companies recognizing that others are struggling mightily and using this as a way to say, maybe growth isn't new states, maybe growth is expanding the vertical and different supply chain assets?
I'm seeing companies do that in their own vertical. So maybe not going into other supply chain assets, but saying, I know I'm in this state and I'm positioned here. I want to maintain or increase that position here as opposed to deploy capital to expand. Or I've made an investment to get into this state. I need to make sure that that state's going to be good. I'm definitely seeing people with success trying to take things in other states. And I am seeing, some relative success in there. There seems to still be action in Missouri and action in Jersey and action in Illinois and Ohio and Florida relative to doing a licensing deal or bringing a brand to places or trying to do new things. But more often than not, I'm seeing people clean up problems that they have or try to leverage the existing positioning that they have somewhere where they are already. There are a couple people that I know, are trying to get into places that they're not, which I think is fine. But my overwhelming the overwhelming question that I get in 2023 in Q1 and Q2 of this year is, what do I do? I've got a company. I've got this much revenue. I'm functioning. I don't really need money. What do I do? I can't exit. What do I do? What's next? What should I do? I get more questions like that than anything these days. And I'm just telling people, hold serve.
It's such an interesting response, right? Because there's wind at their sails. They've got a business. It's working. There's opportunities maybe to grow, but maybe the best approach, like you're saying, is hold serve, lock down the hatches, figure out where you can improve on the margins. Maybe that's operational efficiencies. Maybe that's figuring out where you need visibility and tools to invest. And then prime yourself ready for when the unlocking goes. Just set yourself up.
Something very interesting. When I talk to somebody, one of the very first, and I don't know them that well, one of the very first questions I ask them is, why did you start your business? And if the answer is anything other than to exit, anything other than that, and there's hundreds of different answers, then you know what I tell them? Hold serve. And if their answer is to exit, I said, hold serve. Because here's the thing. You guys don't have me on because I'm a wilting lily. There's no fucking exits right now. There's no cash. There's no buyers. There's no equity. There's no public equity market. There's no euphoria. There's no exits. So if you're sitting here telling me that you're going to exit for anything other than a little bit of cash and a little bit of paper, go sell that shit somewhere else. I don't care what you got. I don't care if you have gold at a discount in cannabis. You heard it here first. There's no cash exits. So if I know the reality of the market is there's not a buyer, then what do? You stay there as long as you possibly can. You squat if you need to, right? You don't pay the property taxes on the house. You don't pay the mortgage. How many stories have you heard about someone who have sat in a house for 7 years and haven't made a payment on it? Well, guess what? That's a strategy. So, my strategy, it's worked.
You're not wrong.
I know I'm not wrong. Here's the one thing, Kay. I know I'm not wrong. That's why I'm so fucking angry all the time, because I know I'm right. So, this whole world that we live in the capital markets has been perpetuated on up and to the right, constant growth. Well, if you're in a market where you're kind of level, great. You know what? Wild, Groon, Timeless, Arrow, Rove, go crush the markets that you're in. And you don't want me to hear this. Squeeze out all the little guys who can't compete against you and own it and wait. Because if you believe in the thesis that we all believe in, waiting is going to make you better off, because there ain't an exit coming in 12 to 18 months, unless you're in the beverage industry.
So do you think that then this is kind of like an extinction event almost, right? Like, because the companies that are there, like you said, and holding serve, right? Like they're paying their bills. Yeah, the cash flow could be better, but they're still in business. They're still making money. Like cannabis isn't going away like we described, right? So like, is this essentially like a culling of the herd maybe?
It is. It's a quasi-extinction event. I don't know if I've talked about it on your show, but I've talked about it previously. One of the beautiful, most interesting, wonderful, lovely things about cannabis is cannabis doesn't allow for an extinction event, because you can't bankrupt a company. You can foreclose on a company, but you can't bankrupt. So the remedy that's available to an investor in most any other industry, which is bankruptcy, doesn't exist in cannabis, because cannabis is still federally illegal. So cannabis, unlike any other industry I've ever witnessed, perpetuates the proliferation of zombies for longer than any other industry I've ever seen. So do you have zombies? Yeah. Do you have some people who proactively say, I'm done, and it's an extinction event? Yes. But I think the harder it is to achieve capital into companies and the harder it is to achieve exits, you're going to see more people throw in the towel. And you're going to see the proliferation of more zombies. There's also something else that we don't talk a lot about, is that black market incentives are not aligned to regular market incentives in cannabis. And now you have this whole hemp outlet. So something else that will probably proliferate zombies is if we have a company that's making green pre-rolls and it's only in, Missouri or California, and it's an $8 million a year company that's barely making money. Well, they might be able to pump out a couple $1 million BM and survive. And they might be able to pump out a couple $1 million cloning this and making it a hemp product and actually make money and stick around, right? So you have 3 or 4 proliferation, mechanisms in the ICU for cannabis that you don't have in biotech and manufacturing and AI and tech and keep going, right? Because you're just going to flush those companies. Whereas cannabis, you recycle them for some reason.
Can you just define zombies so everyone's clear what that means? And then can you also explain the approach of taking it to the black market, just in case someone listening doesn't understand what you're referring to?
Zombie is a company that should be dead and isn't. So Zombie is a company that, for whatever reason, is sticking around and hasn't gone through a traditional bankruptcy process for one of 2 reasons. Today is May 7th, 2005. Yesterday, there was a deal announced for a company called Red, White, and Bloom. That company is a fucking zombie, bro. There's no possible reason that company should be alive. There's no possible reason that company is going to maintain success. The only reason that company is still alive is because the debt holders, I think, didn't want to take a zero write down, and they did a deal to basically keep the company on life support for an extended period of time to not have to do that. That's a zombie. In any other industry, that company would have been bankrupt. The debt holders would own the equity. It would have been taken private. And if there was anything left to salvage, it would have been sold, and it would live to play another day. Doesn't happen in cannabis. You guys aren't old enough to remember that in the 1980s, one of the 3 largest automotive companies called Chrysler Dodge went bankrupt and was bailed out by the U.S. government. Guess what? Still around. So bankruptcy is a capital markets function that allows a company to right-size itself in a legal fashion. Doesn't exist in cannabis. So that's what a zombie is. And you know a zombie You can see a zombie coming. You can smell it coming down the hall to the meeting to you. It probably owes you a ton of AR and hasn't paid bills in a while, but they still got product on shelf and they're still showing up at the shows with new merch.
And that was great. That was perfect. That was well articulated. And then expand on the company who can expand into the black market and survive. Because I think sometimes people don't recognize that we are forcing companies to have to move in these directions just based on the situations we've set up.
It's just let's do a very easy model. If you're a legacy cultivator in California, you have little to no incentive to be compliant. So if you have a 600 lighter in LA, and that's a facility that's throwing off 6, 8, 10 million a year in revenue, maybe, right? Well, if you're not licensed and you don't have to test and you don't have to pay taxes and you just trap it, that's a pretty profitable exercise. If you are fully compliant and legal, you're barely going to make money given taxes and utilities and rent, unless like your stepmother's cousin owns the facility and you're, sharing power off a generator or something, right? So if you look at the way that the industry has been created, it's just hard to make money operating compliantly. Plenty of people do it. So if the industry has been created by a bunch of people who operated in the dark, were successful in the dark, the only thing that was going to loom over the dark was you potentially getting pinched, right? And if you were real, you probably eventually got pinched for some reason, and you know how to operate that way. Why are you going to come into the light? So when you look at how easy it is, again, in a couple of different verticals to do that, if you look at it in retail, it's also probably pretty easy to do if you want to do that as well. And it's not just cannabis. You've heard of, I was involved with a sports neutral company where we had a franchisee who, every product that we sold, he was buy one, getting one free and selling on Amazon. So it was kind of like, okay, well, because cannabis is so hard, I think it creates more opportunity for this diversion. And I also think because the root of the industry was in an illicit methodology, it just makes it easier for that to occur. I mean, if you look at what occurs in California in Croptober all the time, that's what you're seeing. You're seeing a bunch of guys who have lived on the Hill and who've operated in the Hill and are comfortable doing that, making their money.
Isn't this a really similar series of events that we witnessed with like alcohol, right? Because like alcohol was illegal, then prohibition, right, became legal again, and like you didn't see any like robust like alcohol companies to like the mid 40s, right? I know there was World War II in there, but like prohibition was still kind of around for like a decade after legalization, right? It took a while to like get that whole thing into a cleaned up world like we now see the alcohol industry.
20 years, 25 years. So yeah. And it's the same level of incentive. And you still probably know someone in North or South Carolina who has a cousin's buddy's relative who makes moonshine that you drink once in a while. So yeah, very similar. It's interesting you bring that up. I unfortunately don't have as much time as I want. And one of the things I actually do want to do, and it's been on my list, is to really study the commercial rollout of alcohol from the relaxation of prohibition until like 1955 to see how that happened. And it's not something I've had the time to do, but it's definitely on my desert island to-do list.
Yeah, it's definitely on mine. I actually, side tangent, you can't look that stock data up right on the internet because it's too old. You have to go to the Library of Congress and like physically download like all of that, like historical data from like 1900.
Oh, really? So you have to go into...
I tried. I looked at, you can get to like 1975.
One of us has done this.
Yeah.
So you're old enough to have gone into the microfiche and done all the real research and pulled the patents from the patent office because somebody done that. Anyway.
We could elaborate on, but I think Seth, the main critical point though is that like sometimes people forget how long prohibition lasted with alcohol, and with cannabis there's so many ups and downs. It feels like probably a longer period of time than it actually has been. And maybe it is fair to look to alcohol and say, okay, like it took X amount of years in order to get to this point to have a thriving market. People just need to have a longer term horizon in mind.
Two things. I was a history major in college, so the only thing that I really have to look back on is history. And in U.S. history, the only real corollary for the legal and commercialization of cannabis is the legal and commercialization of alcohol. It's the only one we really have. So it's one to study. The second thing is it's inverse in order, right? Because alcohol was legal forever, and then it was prohibited, and then it was legal again. Whereas cannabis was basically illegal forever, and then marginally allowed, and it's now allowed on a patchwork basis. And I'll preach this till 2032, until I think you have some level of federal clarity, which is even like make it Schedule 3 and let the states figure it out. I'm fine with that. You're going to have all of these misaligned incentives around areas to try to make more money or try to be more successful. And I just think the way that many states have rolled cannabis out, specifically California, it just makes it really, really, really hard for someone who's doing the right thing and doing it legally and doing it by the book to be successful. And that disappoints me.
Are there any outside industry companies that you're tracking as like a signal to recognize that maybe change could be on the horizon and some of the bigger fish are going to be operating here more in plain sight?
Well, we touched on drinks. You know, hemp beverage is hotter than hell. I've been to 2 non-cannabis investor-oriented, industry-oriented meetings in the last 30 days, one in Chicago called So Curious that was put on by a group called Listen Ventures, which is a large consumer private equity fund, and a second which was put on by a group in LA called LA Libations, which is called the Beverage Forum, which is literally like the whales of the beverage universe forum is what it should be called. And it's certainly looking like there are a lot of people in what I would call the regulated alcohol and spirits industry who are interested in figuring out how to get into cannabinoid hemp delta beverage for a lot of different reasons. So, you know, that's the one space where in cannabis, if I put everything in that box in general, I've seen the most activity in the last 8-10 quarters. And it seems like there are non-correlated, non-cannabis oriented equity funds and investors that are looking at it. InvestBev and Listen Ventures are probably at the vanguard of that. There are also, you know, fairly large, some vertically integrated, some not, family-owned distributors of alcohol in the 3-tier system throughout the United States who seem to be very interested in the space. So, you know, I do believe that if you get some level of hemp farm bill clarity around what happens federally there, you're going to see some heavy activity in that sector. Very heavy.
Any companies or any strategies that you say, this is how, if I was speaking to someone, this is what I would recommend?
You have a couple of cohorts that have formed. So I've been tracking 60 companies in that space since October of 23. And you have kind of 2 cohorts that formed. I think that right now that sector is a race to the first person to 100 million in revenue. I thought it was the first person to 50. I've changed that yardstick. And you have kind of 5 companies in the lead. Keef, Can, Breeze, Delta Bev, and Nowadays are probably in the lead cohort. You have a second cohort that are probably like 10 to 25 and trying to get to 50. That all have different kind of flavors and models and methodologies. I think figuring out a way to grow rapidly in that space intelligently is smart. I think figuring out a way to, honestly, I hate to say this, cleave the cannabis business from the hemp business at some level, so the hemp business is pure standalone, is smart. I think figuring out what your balance is between DTC and brick and mortar retail is smart. And figuring out how to operate in the 3-tier system is smart. So there's a lot of complexity there. You know, some people manufacture, some people just do spirits, some people do beer, some people do pieces of all of it, some people just distribute. So it just kind of depends. But there's 2 things that seem to be consistent. One is that 24 to 36 or whatever that younger demographic is drinking less beer, period. Whether you want to believe people are drinking less alcohol, they're drinking less beer. And what they're clearly doing is they're clearly substituting with something else, which may be cannabis and it may be hemp and it may be smokables and it may be beverages. But they all see the fact that cheap beer sales are going like this, and they're replacing it with hemp beverage du jour of whatever shows up, and it seems to be selling. So the velocity of the cohort has certainly surprised me. I have been a very early supporter and advocate of Can, and I think it's one of the leaders in the space, has a great team, has a great group of investors. But what they've done to blaze the trail in that industry has now been backfilled by 15 or 20 very fast followers.
Yeah, beverage space is absolutely wild, and it's exciting to watch it just kind of proliferate across. I was in Florida a few weeks ago and went into a general retail store, and there on its own counter was a ton of THC beverages, and the staff was unsure about it, but knew they were selling really good. And I thought that was an exciting part. It was just like a regular store. But before we kind of finish off, I just want to get your takes on LinkedIn. I know you're super active on there. I know there's a few things you're working on. Is there anything you can share with us now?
Started a new consulting firm this year called Ordo Verde, which is focused on cultivation, manufacturing, product, and retail. Picked up a fairly large MSO enterprise client, put that together with Tobias Rich and Danny Cyrilniak and Nathan Batzer, and really excited to roll that out in a couple different places, trying to help people hold serve. So that's been fun. LinkedIn has turned into a thing of its own. I'm not sure that other than putting on there what's in my mind and what I want to say, I know that I'm better at it or more important at it than anyone else. I've committed to a strategy. That strategy seems to be working. I seem to be one of the loudest voices on the platform, and I'm just continuing to try to push my dominance and hegemony as much as I possibly can there, and appreciative of partnerships with wonderful people like the guys at the Dime for providing me a platform for my voice and for more content. So I'm grateful to you guys for that. But yeah, it's been a wild ride there, man. Wild.
I love it. So for our listeners, they want to get in touch, which they surely know how on LinkedIn. They want to find you. Where can they get in touch?
LinkedIn's probably the best first place to find me. I have a Kate and Associates website. I have a Seth Yakatan branded website. I have an Ordo Verde website. I have a newsletter link on LinkedIn that you can get, my fresh insights all the time. I'm probably going to try and launch a product or two on LinkedIn. I certainly think that the cannabis media space there's opportunity there to do some things. I certainly want to promote the green list that I launched with the Beard Brothers last year, which is kind of the all-in-one place to find out what's going on where, to plan your conference schedules. But yeah, I'm just super supportive of the support that I've gotten there. And honestly, the numbers that I see on my own posts on a daily basis, I don't even believe them anymore. I will say one thing. There is a guy in India who's probably making a lot of money on me because the bots in my feed, I've gotten to the bottom of it. There's people who get paid for clicks, and I am convinced that I have made a small village outside of Hyderabad a very nice sum. So
I love it. Well, hopefully that family starts engaging with our content as well. So Seth, thanks for taking the time. This was a lot of fun.
Appreciate it, guys. Thank you.